Good afternoon, everybody. We are delighted to introduce Jolene Moore as our distinguished speaker today for the June Mortgage and Market Insights. Jolene is a celebrated expert in mortgage finance, renowned for her deep market knowledge and meticulous attention to detail. As a leading authority in the field, she is recognized nationally as a top producing lender. Jolene currently holds the position of branch manager and senior home loan consultant at Cross Country Mortgage. She is also a sought after trainer, sharing her expertise with us at Cindy Bishop Worldwide. Jolene offers a variety of educational programs, including mortgage training sessions, not only in person at her Fairfax office, but also, of course, via Zoom, business development seminars, and also courses tailored for real estate professionals that are very specific to your needs. And we always have them advertised. The things that are no credit are under webinars, just so you know, in case you're looking at a July continuing ed and you can't find it. So to learn more about Jolene's training opportunities and how they can elevate your business, please visit our website. Also, tomorrow at 1 o'clock, if you guys haven't already signed up, my very favorite thing is on. Jolene's doing at 1 Financial Freedom. I'm telling you something, I still use the forms that she gave out during that presentation. They're phenomenal. They're the best financial forms for your daily use I've ever seen in my life. So please make sure you sign up for that. Again, at Cindy Bishop Worldwide, to upcoming events, then to webinars, and you can sign up for that. That will be a virtual event. All right, Jolene, take it away.
All right, thanks everyone. Looks like our crowd is smaller today. I guess it's that we're starting the summer months, but I'm glad for those who are here because I think I have some good information for you guys today. So we're going to go over what we usually touch on each month. So rate environment, rates. It's interesting in the media and how things play out, because it's always talking about rates are improving or rates are this. Keep in mind, a lot of times the media is behind. And what they also don't touch on is, like this week, the market is improving this week. But it means last week the market was worsening. So then what happens is a lot of times is when we start to improve, we may not actually be improving beyond what we lost last week. So it's like we're kind of hovering in this area right now, where we kind of get worse and then we'll get better and go back to there, but we're not continuing to go down. So obviously the market's going to depend, where things go. And that's what I'm going to talk about today. So I think I heard Sherry talking about, the job market being better, and that helps, not have so many realtors in the profession. Now, the report that came out today, the official job report comes out on Friday, but there is a JOLTS report, which is kind of preliminary, another way of tracking job data. And that showed that the labor market was not as strong as it has been in previous months. So there's a good chance that we may see the job report that comes out on Friday, where we may see the labor market worsening, weakening. And obviously, that's not great for the economy, but it is beneficial to interest rates. So it's always a hard battle, because what is good for us is not necessarily good for the economy when it comes to interest rates. So if we do see the job market starting to soften, what that means is that could lead to the Feds being more incentivized to cutting their interest rate. Because a lot for the past couple of years, the feeling was, as soon as inflation gets down where the Feds want it to be, then we're going to start to see them cut their rate. Well, inflation has not been going as much in the direction as we need, and it's not been going down as much. So we have been seeing our interest rates staying higher. So now the feeling is that if the labor market starts to soften, then that's what's going to end up pushing the Feds to start lowering their interest rate, which is going to help our rates improve as well. The other thing the Fed started doing this month is buying treasuries. So that's going to help us with our interest rates as well. Oil production cuts are being phased out. So it means there's going to be more oil, which can help with inflation as well. Because when there's, a shortage of that, then that means we have to pay more for it. So when there's more availability, that's going to help with inflation. I'd say rates in general are still in the low 7s, high 6s is where we see most programs. VA and government loans and FHA are in the mid sixes. So those are always better than our conventional, or they are now. They have been in the past as well. A couple programs for you to keep an eye out on is one, investment properties right now. The rates are crazy. Like I locked in 2 investment properties last week. One of them was a cash out refinance and one was a purchase. Both of them had loan to values below 70%. One was at 70, one was a little lower. The rate was the same and slightly even better than it was as a primary residence. So I locked them in at 7.125, which was insane. So if you have any clients that are looking to purchase investment properties, now could be a great time for them because their rates are better than I've seen them in a long time. I reached out to a couple of my clients who are investors and said, the rates are crazy right now for investments. And I don't know if that's, just us, if we're having an incentive, to be able for investment properties, or if that's across the board, but that's what I'm seeing for cross country. The other thing that I've noticed recently that's priced really well is the 20-year also. I locked in a 20-year fixed and it was in the mid sixes. It was the same as the 15-year, and obviously it's a 5-year longer term, which makes the payment more, palatable. So that's another option that I've been looking at for clients as well. When they want to shorten the term or want to get a better interest rate and they have the room to pay the higher payment, not all clients are going to be able to do that. But if they do, the 20-year fixed is also a great option for clients right now, and giving them a very good interest rate. All right, market news. CoreLogic came out with their numbers for the current for April. Home prices are continuing to rise. Nationwide it was 1.1%, which means year over year we're up 5.3%, according to CoreLogic. Again, this means that, when you look at the numbers down below, our the Prince William County's increased 5.8% in houses sold. Northern Virginia Realtor Association 13.5, Dulles area 5.1. You can see the new listings are up in all 3 areas, and the median price is up as well. Highest is up in Dulles, then Prince William, and then Northern Virginia. But the crazy thing is look at Falls Church. It was up 43% in median price in April. So their median price in Falls Church was 1.15 million. That's just craziness. So the reality is that you guys have, I'm sure, seen, we've seen a lot of competition, but we've also seen housing prices increasing. And so, it's, even with interest rates where they are, in a better situation. Like I had a client today reach out, they want to try to get to a little bit of a higher sales price. I ran the numbers for them. The market had improved, so they had a better interest rate, so their purchasing power increased. So that is going to happen. So that's something to keep in mind. As we do see interest rates improve, that's going to help the buyers be able to increase their purchasing power. So it's a good time. May was a very strong month for me. It's probably the best month I've had in, I don't know, a year and a half or so, volume as well as units. So there's a lot of, market to be had. So it's something that we just need to make sure that we're out there, sharing the information and getting in touch with our clients. All right, lending information. Always like to share data on this as well. So Community Promise Grant is a grant that I found out, I didn't realize, some of these. So we have a couple grants here at Cross Country. We have this up to $4,000. It's called Smart Start. And then we have the Community Promise, which is $6,500. And these are specialized to cross country. They are based on either how much you make, and being a first-time home buyer, Community Promise is based on where you currently live. So there's certain zip codes that are eligible for Community Promise. One we have found that is eligible is those that are living in Alexandria. In our market, there's a couple, a few different areas in our market, but I have a client right now who's lives in Alexandria, renting, and is going to move out to Fredericksburg. And they're going to qualify based on the fact that they currently live in Alexandria for $6,500 grant. And it's not income based. It's all about where you're currently living. So that is an opportunity for them to be able to get funds towards their down payment and closing costs. We have a new program coming out, and I don't have all the details yet, so I'll be announcing more of this later, but it's going to be a buy before you sell program. It actually looks like it's a 0% interest rate on the new loan. So it's kind of similar to a bridge loan, but no rate, and the payment so there's no payment. So there's no payment that we have to count as for qualifying purposes for the new home. So that could be a great option for people that are looking to buy before they sell. So I'll get you more information on that very soon. We also have a 15% down, no mortgage insurance. And this is a great thing to be aware of, because in this market, I know Richard's an appraiser and he could probably give us some information, but I have seen some appraisals coming in low. I have not seen a significant amount of appraisals coming in low. And I think some of that, from what I've experienced, and you guys can give me your thoughts as well, is I see a lot of listings being listed below market value, and then they're escalating up to market value or slightly over. So I have not experienced where there's a significant amount of appraisals coming in short. And if it is, it's moderate, maybe 5, 10,000. I think the biggest one I've seen is 25. But I will tell you guys, I've had 2 agents reach out to me over the past couple of days that are working with credit unions. And those credit unions appraisers brought them in 90,000 low and 60,000 low. So it does matter who you work with on the lending side and who the appraisal panel is when you're looking at these escalations and, waiving contingencies. So keep that in mind when you're working with your clients.
Jolene, you're exactly right. It's been like that with the credit unions for decades.
Yeah.
They'd rather tell their clients no at the very beginning rather than go through a foreclosure process.
Right.
So they don't want you stretching numbers with them.
Mm-hmm.
And it's really hit and miss. One other thing that you mentioned also about the raising the price after the listing, because the appraiser has to turn all that into the underwriter, as you well know.
Mm-hmm.
And that's where people are going to get dinged, because the listing history, particularly in a market like we're in now, as you start going above list price, particularly with a low down payment loan, it gets risky. So it's all risk assessment,
Mm-hmm.
and it can be looked at a little bit more harshly. You got an 850 credit score, it may not be a problem, but if you're coming in with a lower credit score, the security is going to be looked at much tighter, but it won't slow you down.
Yeah, I haven't experienced that as much with them checking the appraisal being any different, because I think in general right now, I think everything is scrutinized. I feel like every lender is, like you just said, is risk adverse, and so they're checking dotting every I and crossing every T. And no matter what, I can have very well qualified 800 credit scores, and we're still going to, verify everything. So I think in general, I've read articles where they're saying the credit is tightening, and the standards. And I wouldn't say that we're turning down people or we're rejecting or, denying loans, but what we are doing is we're asking for every detail. So that's something to keep in mind when you have clients, and if they get frustrated during the loan process, to just know that this is our process right now. This is how the market is that they're just checking everything, and they're not going to let anything slide. So, if there's something that they're trying to hide, we're going to find out. It's in this day and age, you just can't really hide anything. Obviously if you work really hard, I'm sure you can, but in general, we're going to figure it out. But thank you for that and adding that. I appreciate that. All right. The other thing that, we've been saying for a while too, is, if obviously with rates being higher, if they are looking to buy now, and then when the rates do start to improve and it starts to make sense for them to refinance, we are waiving our lender fees. So we're giving a lender credit towards that. We give them a certificate at the time of closing so that they'll have that information. And then obviously we'll know as well. The other situation I had recently was non-warrantable condos. It's come up, and I worked in this particular unit in DC. And when the loan came to me, when the client came to me, the agent had been told by the community that it was going to be a non-warrantable condo. So we started the loan process as a non-warrantable. We have that program available. So just in case you have clients that are in that situation, we do have that option. So we started the process with as a non-warrantable condo. We got the information from the community, from the condo, and it turned out we were actually able to warrant the condo. So we are able to switch it from a non-warrantable to a warrantable. It's crazy because I have now gotten so many calls from other agents in that community that seem to be the only one that's been able to do that. So if you do have, questions on condos or what we can do, please reach out. But, we have a lot of options in regards to that. We also have reverse mortgage. I personally wouldn't do it, but I do have a colleague that we have a group here at Cross Country that handles reverse. So I would be able to give them to an expert in that area. So if you know of anyone that may be in need of a reverse mortgage, you can always refer them to me, and then we can talk to them, and then I can pass them on to my colleague. The other thing that I've been offering to clients that has been helpful, especially for clients who may be in an FHA situation where their credit's not quite to the standard of where we would normally want to do a conventional loan. And so I had a client that was doing an FHA loan, had made several offers, and kept getting beat out because they don't, a lot of listing agents don't like FHA contracts, as we know. So finally, what we did is we switched him to a conventional, and we did a 1-year temporary buy down that I paid for. So let's say the rate was 7.5. We bought it down to 6.5 for the first year. So the first 12 months, the interest rate's at 6.5. And then after that, then they are able to, refinance, or it would go up to 7.5 for the rest of the loan, however long they're in it. So, in this market, it's hard to get a seller credit, as we know. So this was a way for me to be able to get them to a lower interest rate, to allow them to qualify, to be comfortable with the monthly payment on a conventional loan, so that we could switch them to conventional, and then got them under contract and was able to get them to closing. So, I know some of you have, worked with me or talked to me, but we try to get very creative for our clients because we want them to be successful in this market. So if you have anyone, in that type of situation, that's something we can talk to them about. The other thing is gifts. I get this question all the time. And I will tell you, gifting, on almost every program is allowed, and it has to be a family member. But the easiest way for us to document a gift is on a conventional loan is for the donor. We have a form gift letter that we have the donor fill out. And then we have that those funds wired from the donor to the title company prior to closing. And then we get a copy of the wire transfer from the title company showing that the money was received from the account number that was listed on the gift letter, so that we can match it up to show that it came from the person that indicated they were going to be the one giving the gift. So it's a super easy process. And it makes it very simple for us to be able to document that. And we don't want the money going to the borrower, because then it just complicates and needs more paperwork. So the easiest way is for us to get that, get it directly to the title company.
So it has to be only a family member?
Yeah.
Okay.
Yeah, it has to be a family member. And that's for FHA, any loan you do, it has to come from a family member. Or like, a domestic spouse, or, something like you can form a really long-term relationship potentially. But for the most part, they're looking for it to be a family member. All right, anyone else have any questions on this? All right. All right, tips for future transactions. So obviously fast closes, mention it every time, but it still proves to be true that we've closed many loans in May and helped clients win with the offers by closing in less than 2 weeks. So I think, like, I had a client as a past client of mine, and they like to do it their way, and they made an offer, and they wrote contingencies in all the offers, in the offer with long contingency periods, and what I indicated to my past client is, let me help you, be successful with this offer. So if you guys are looking to make offers, we can put contingencies short so we can help them be successful if we have the ability to do it. And that's why we have people get pre-approved ahead of time. We get the documentation so that we have them prepared and be able to do that. Because, you know, I can get appraisal back in 1 to 3 days with a brush fee. Standard is 7 days. You know, our turnaround times are 24 hours to 48 hours. So we have the ability to shorten all these contingencies to help people be successful and help their offers stand out. So it's something you definitely want to keep in mind. Cash out refinance. I had 2 transactions last month that were cash out refinances. One of them was actually buying out for a divorce and paying off a spouse. And that is technically not considered a cash out in our eyes because we are paying out a current owner of the property. So we're able to get the information we need, put it on the settlement statement, the CD, and showed that we are paying off the ex-husband. So then it's considered a rate and term refinance. The other situation I had was a client who was an investor, had gotten a property that with a hard money loan needed to pay off the hard money loan. So we did a cash out refinance for him to pay off the hard money loan and be able to put a new loan in place for him. Obviously saved him money on the monthly payment as well. And, you know, like I mentioned, our interest rates are phenomenal on those investment properties right now. You know, if you ever have a VA loan and you have the appraisal come back, just know you can request for a waiver for any repairs that VA indicates. We've done that several times now and been successful with it. It can really help mitigate, you know, issues prior to closing for VA loans, and also help sell it to the listing agent. You can let them know that that's a possibility. And I always mention that to them, you know, when I call on the client's behalf. The other conversation we've been having a lot lately is appraisal gap strategies. Like I just met with a client yesterday. You know, they're looking in Arlington, which, as we know, is a hot market, highly competitive. So we want to be able to prepare them so that they know, like when they get ready to make that offer, if they need to waive the appraisal, what does that look like? They were putting a significant amount down. So I showed them that basically they wouldn't have to bring any more money. It's just basically how we're allocating the funds, you know, that the cash to close remains the same. The payment basically stays the same because we're basing the loan amount now on the lower appraised value versus this actual sales price. And then we make up the gap. So if you have a client that's putting more than the minimum down, it can have a minimal impact potentially, unless it's like what we were talking about with those credit unions. If it's $90,000 gap or a $60,000 gap, that can, you know, be a little bit different. But we were talking about like a $25,000 gap in this situation. So those are things that we have conversations with the clients to help prepare them, again, to be successful. Now, it's going to be interesting, and you guys can share with me on what you've been seeing is, you know, potentially the summer months have been a little slower for us at times, where we may see houses not be as competitive or not go as quickly. So I'd love to hear from you guys if you're seeing any of that yet. And see kind of what happens with that. But if we continue to see, you know, multiple offers on several properties, then we definitely want to have those conversations with them about how to handle the appraisal gap that, you know, may come into play. The other thing that we're seeing a lot right now is new jobs. You know, I have a lot of clients moving into the area, and I have a new starting new jobs. And so one thing I wanted to just make sure you knew is that if you're starting a new job for a conventional loan, and this is with VA as well, you have to start the job within 90 days from closing. So if you're, you know, I have a client right now that's looking to start a new job on August 1st, we can use that income. We have to get an offer letter that's signed by both parties, by the employer and the borrower, and that there are no contingencies to the offer. So that means like if they have to get a background check, or if they have to do any other types of checkpoints that before they're cleared to start the job, then that can be an issue. We have to have all of those things cleared. Like I had one that's a teacher. She's moving into the area. She had to do a fingerprint and she had to do a medical exam, I think, and a couple other things. So we had to show that those were clear before we could use that income, you know, and be starting within 90 days. So something to keep in mind as well if you have clients that are coming and moving into the area. Buying before selling, this is something that's, you know, obviously comes up a lot, right? Because we have, you know, when clients are looking to buy before they sell, we have all kinds of strategies to help. And one of the, it actually came up for me this past month because I had a client that was moving here from out of state. They had their house on, under contract in their current location, but it would still had some contingencies in place. It hadn't gone to closing. And I said, you know, if you're going to write a non-contingent offer on the property here, then we have to have a backup plan. Should something happen with that contract and you not go to closing on time for the current house. So we got his mom's information. We were going to have her as a co-signer. So if things didn't go according to plan, we could add the mom on and be able to still go to closing. 2 days prior to closing, or 3 days prior to closing, we found out that the buyers had a house they were selling and that house hadn't sold. So the domino effect was going into play, and we now were at risk of not being able to close on this house. But the good news is we had a backup plan. Like, we already had it planned out. We knew we could still execute on this contract and it wasn't going to put them into default. So you just want to make sure that if you're not working with me, you're working with someone that has thought through and planned through that. So for me, I was calm about it, and I was able to help them be calm because I knew we had a contingency plan. So if that's something that you have clients, that are looking to do, just make sure that they work through that and talk through that. The other thing that we are doing a lot with clients, and as you guys all know, they all have low interest rates, so they want to keep their home, right? So now they want to rent it. So they want to rent their current home and then buy a new home. And how does that work? So one, we have to have an executed lease prior to closing. It has to start within 60 days after the settlement date. We have to have a copy of the security deposit and first month's rent. We have to show those deposited into our borrower's account. And they have to have a certain amount of equity. Depending on the loan product, it would vary, but at least probably 80% loan to value is where they'd need to be, if not better. So it's possible. And then the other thing to keep in mind is, let's say their rent is going to be $2,000. We can use 75% of that rent to offset the current mortgage payment. So we never are able to use 100% of what new rent they're going to be receiving to offset the mortgage. So it can still create a loss on their current home. So again, those are all the strategies and, things that we discussed to help figure out what that is. So like, I had a client that was getting ready to make an offer yesterday. She has a current house that she's going to rent it. So I said, okay, we have to have a lease. We had two options for her. We had to have a lease, with describing everything I just mentioned. Or if we don't get a lease in time, you can pay off your car and you could still qualify. So again, we have two options for her where I'm not relying just on one, because if her house doesn't get leased in time, we want to make sure she still has another option to still be able to perform on her contract. So we had two options for her. She was able to do either one, and then we can move forward with the pre-approval. So those are all, I think, valuable tips for you guys to keep in mind when you're talking and working with clients, to make sure that all of these strategies have been worked out. So it can help you guys be successful, make sure you get paid, and make sure they get into the house. Any questions you guys have?
Jolene, on the leasing part, does it have to be fully executed or in process?
Fully executed. Has to be signed by all parties, and then it has to have the security deposit check and the first month's rent and show it deposited into their account.
Okay. Another question I have with the new job, and you said it must start 90 days, within 90 days of
Closing.
Closing. Okay.
Yep. The closing date. Mm-hmm. Yep. Good questions.
Thank you.
Anyone else have any questions? All right. Well, I hope this is valuable for you guys. This is all my information again. We're always here. If you need anything, reach out to us. Have a fabulous rest of the day. I know a lot of people take summer off, but I say keep working, keep plugging away, keep touching base with your clients, and make sure the fall is strong for you. And we are here if you need us. Take care.
Thanks.
Thank you.